Okay, we are live. Let me fix this banner. How's it going, Roy?
Doing good. If we were late, it was because of Tanner. Not really, but always good to be back at our normal time on Tuesday for Bootleg Weekly. And this week, man, we have a banger. A lot of topics that we're talking about. There's actually too much to talk about. So some we may not be able to hit tonight. But we're going to look at tonight, of course, is OpenAI in trouble? We're going to look at several of the hyperscalers, including Tesla as well as they're about to enter earnings. We'll take a deeper look and talk about our SOFI expectations and numbers as we have earnings on Friday. And of course, we'll be covering that live, as well as a preview on PayPal and expectations there. Beyond that, there's a whole lot of other topics and subtopics, but I think we can kind of start there and see where it goes. As always, thank you guys for tuning in. We have a Q&A period, so if you're asking questions related to what we're discussing, we'll typically interact with you. If it's unrelated completely, you can hit that question. You can send a question in, and we'll hit those in the Q&A period at the end of our stream. Tevis, how are you today?
Doing good. Yeah, excited to get this started. Lots of stuff to talk about. Earnings season is back officially. I got this. I don't know if you've ever tried these.
Yes, they're good. They're so much better than Celsius, I think.
Yeah. I think this is. I've been binging these. This is better than Celsius. So I'm gonna crack that open and I'm gonna chat with people. And then I think also want to maybe share a little bit about potential Friday plans, but we can leave that to the end.
Oh, yes. Yeah. I think we can talk about that too. This is what I'm drinking tonight. Ultra Peach, a little monster coming right at me. Celsius does own Alani. There was an acquisition, a buyout arrival. And last year, honestly, when I was tasting Celsius, when I was thinking about it as an investment thesis, I don't think it would have been enough to get in for me. But one of those things where it's like, I like the peach vibe. It's decent. A couple other flavors are decent. Man, Alani New is better. So the best thing, though, looking at that, it is like, look at the can. It's so girly.
So generally I buy the Celsius at Costco, and it comes in like this pack of it's like three flavors, and it's like 30 cans or whatever. And they didn't have that anymore, but this was new. And so I was like, all right, whatever, let's try it. So now I have a bunch of these in my fridge.
Nice. Yeah. I guess that's one nice thing about being in Canada is it's new for you just because it takes, years and years to get there. So congrats. Enjoy. Are you still in Celsius, by the way?
No.
Okay. You invested like as a swing at some point in the past, or okay, yeah. Yeah, it's some of these plays, and we'll maybe mention a couple of them tonight too. Like UNH was one that I left out. I'm not invested in UNH. Tevis, you and I have talked about it a little bit. It fell a lot today. Maybe we want to start there. Let me pull up UNH here just so we can see a chart a little bit. And I'm just going to use this.
Down 20%.
Yeah. Okay. So UNH, and then you can look at pretty much everything, especially in insurance, but like even HIMS got a little bit hit today, although HIMS has been weak for a little bit. So yeah, if you can throw this up, let's take a look at what happened and why some people are saying that this is a great opportunity. So this is over 5 years. This chart, let me blow it up here a little bit more so it's easier to see.
Yeah.
Look at it year to date, even just year to date, it's down 16%. Over the last year, it's we were talking.
This is $70 cheaper today than it was literally yesterday, Roy.
Yeah, it is. It has fallen off a cliff. Now I remember we were talking about it down here. And did you ever pick up any UNH shares?
Oh yeah. No, this was a full swing trade for me in July and in August, and I cut it finally in September, I think.
Yeah, I think that's right. You made out like a bandit, my friend. And honestly, like this is why it's so important to know why you're investing and what you're investing in. Some plays like UNH, at least at this point, like maybe it's a great long-term investment, maybe not. I personally don't think so. Are just oversold, and they need any kind of a bounce. Everything is so negative. Maybe the theme of PayPal's earnings, by the way. And Wonky, thank you for being a member. Really appreciate you. But yeah, you made out a ton. And now we're back here at these levels that we recently visited. So a lot of people are wondering what's going on. Our friend Chris Patel, he really broke it down. He does good work on pretty much anything that he puts his mind to. But he says that today's lower move is justified based on a proposed reimbursement rate growth cut. The repricing will likely result in an industry-wide re-rating of future multiples. Expect price targets for 2027 and beyond and softer guidance. And the key will be around how the managed healthcare companies will react. It's likely that we end up seeing significant cuts to fringe Medicare Advantage benefits. Each of the insurers will likely reprice their contracts with hospital systems to reflect the change. So basically, they're getting less from the government just on the reimbursement side with Medicare and Medicaid. And as a result, they did take a hit. And this was quite a hit. By the way, you can look at the price 316. Cheap can always get cheaper. So also that's a good lesson too of don't necessarily just buy every single dip that's available. Some are very credible. Hey, maybe this is a great one. Tevis, what are your thoughts initially here? Does this have your eye and maybe you'll swing again, or are you just staying away?
I think so. I was chatting about this with a friend earlier today, and we were talking about what cash secured puts we might want to write. I think the reason I would be staying away this time, and I was like, oh yeah, absolutely last time, is because I think we're in a different, at least my portfolio is in a different place where one of my learnings in 2025 was, hey, if you're going to write on stuff just because it's been beat down or you think it's going to turn around or what, like if the premiums are a primary consideration, you're going to be left holding some positions that you might not feel as confident in. And that led to the tax loss harvesting for Next. That led to tax loss harvesting for Duolingo. And then, yeah, like I did make out on New or on UNH. But I think right now, in my opinion, like I would rather write on stuff that I actually want to own. Right. So I'm not, it's not attractive to me. Like it can get cheaper, I'm sure. Like there is a price probably where this is like too cheap to ignore. But even if I get to that place, it's going to be too cheap to ignore for a leap because I just don't want to be in UNH over the long term. It's not really my profile of something that I would, be in or falls within sort of like the risk tolerance or the reward expectations that I want. And so in July, everything was flying and I was like, oh my gosh, this is absolutely beat down. I can get a lot of premiums out of this. And I did. I wrote in the money and cash secured puts and I picked up, I think back in July, like, hold on, let me see. Because I do these updates on a regular basis, right, Roy? And so
Yeah, you do.
here, I'll show you. Here, back in July and in August, like UNH went as high as like 8% of my portfolio. And yeah, like it got up there, right? And eventually I cut all of it. And it was a trade and that's fine. I think I got a cost basis around 250 to 260 and I cut it, I think like at 330 or so. I had some leaps as well that I cut. And that's like I took advantage of the moment because everything else in my portfolio was doing okay. And right now I'm like, I can find more attractive opportunities both from a premiums perspective and from a confidence perspective that I want to hold. Like I don't need to force it.
Yeah, for sure. And that's one of the beautiful things about options, like cash secured puts, is this right here. I imagine I'm not even going to bother looking it up, but the options premium has to be absolutely juiced just because IV exploded due to that massive move. It does in moments like this. So that can be a scary thing to buy. And it can be frustrating too if you're like, oh man, I don't like it here, but I love it at 250. Write a cash secured put. Now, the one danger is if the situation deteriorates where like everybody and their mother is like abandoning ship, analysts are writing targets down lower and lower, it can keep falling much further than you can. But I mean, you get a dividend buyback, massive cash flow as well. Two comments that I think pertain here. So Bob at 608 has said sentiment is horrible right now, but I do think on a long-term horizon, UNH here isn't bad. It could go definitely go lower though. And then I thought this was a good comment as well. Mueller Tiempo, the lower reimbursement rate is built based on the CMS Medicare Advantage proposed rule. Reimbursement rate typically increases by 1%. Once CMS releases a final rule later this year, it might rebound. So I'm personally not going to take a stake. I'm really just not that interested, even as a swing. Most of my swing stuff is allocated, and there's that one little drone stock where I'm like, maybe I'll move some of my swing from BM&R to that. Still, I need more than another week, guys, to investigate. I don't have a lot of time this week. But this is one of the reasons why, beyond the share price falling, why people are interested in UNH. And so this is over the last 12 months on the annual basis. The big blue bar here is revenue. So they print money, and let's hide that one just so we can take a little bit better look here. So this is price to earnings and price to free cash flow are the two numbers left. And you can see it's not as cheap as it was back when you were a buyer initially. Briefly, it even dipped below. This is price to free cash flow. I actually should do forward. Doesn't really matter. It tells basically the same story. Now, the one thing to kind of keep an eye on, though, is if you're looking at forward estimates, which these are not, and I should have brought those up, we can look at estimates and what other people are saying too. And a lot of analysts, at least, if you look at this funnel, it looks like a slight increase in terms of revenue in 2026 and a big tick up in 2027. But watch for that. You can see how revisions have gone. And so this is for UNH here in green. That's for financial year 2026. They keep getting revised down. And this today is going to cause more people to revise them down as well. So even with buybacks, even with dividend, even with massive free cash flow, like it may be one of those things where you're looking at and like, hey, it's worth a swing. And it probably is, like, honestly, at some point. But myself, I also don't really like UNH as a company, and it's hard for me to put money towards something that I don't even like, even as a swing. Like Meta is one of those examples. Plus, this is a space that has so much regulation. I don't want to touch it with a 10-foot pole. But we wanted to cover it anyway. It is interesting. I'll probably just keep an eye on it. And I'll be rooting for, people like Chris Patel from the sidelines just saying, hey, hope you make a lot of money on it. I don't have to be in everything. So any other thoughts on UNH?
I think a couple of thoughts. So number one is earnings season is just getting started. So similar to UNH, there are going to be other opportunities that will present themselves, whether they're beaten down for good reason or whether it's unfairly dragged down. I think we're going to see more companies that you might believe in more to enter even in a swing trade position. I think UNH, there's questions right now. It's not as clear cut as as one would make it out to be. Like, I think the Chris Patel post was spot on. Like, it's getting re-rated a little bit by the market. It's not something that really interests me right now. I'm not really looking at it seriously. Could it drop to a certain price where I would be looking at it? Probably. And the reason why I say that is because I think it's always going to be around. And the business, like, it's going to get through it. But it's also like, what is the time value of your money? Because, like, okay, let's say I put aside, I don't know, 100K for a swing trade on UNH or 10K for a swing trade on UNH, whatever. The reason I say 100 is because the right cash secured puts is kind of expensive, right? But let's whatever.
And because you're a billionaire.
No, definitely not that. I guess the question that I would ask myself is, like, is this, if I wrote cash secured puts on the Qs or SPY even, and I got a sign on those because I write in the money like a degen, would I be better off or worse off 12 months from now? And you could absolutely be worse off. Like, there's a case to be made that UNH ends the year at 360 or 380 or something like this, and it rebounds from where it is right now. But what is the relative risk you take in terms of concentration as well? Like, it's not like Nebius falling to 50. And I'm like, okay, this thing is a powder keg. This thing can go to 50 and then can go to 150 within a matter of weeks. And you can get a multiple on your money relative to what you could get on the SPY. UNH at its lows, you know, in July went to 230, and then it went like I think as high as 370 or something like this, and now it's back to 280. Like it'll swing, but I think relative to, again, assuming you're writing it, like you're running the wheel against it, it's I don't think it's the juice is worth the squeeze for the risk that you're taking, unless you're super bullish on the name. Like just as a vehicle for you to wheel it, it doesn't really excite me that much.
So juice squeeze, you're predicting a short squeeze then, and you went, no, I'm just kidding. Not really. These can be very volatile though when they re-rate upside or downside. Now, before we leave this topic and we focus on maybe Tesla next and some hyperscaler earnings and OpenAI, we'll get into, of course, SOFI and PayPal too. You remember this one, Tevis? It was all the rage like 6 months ago. Now, this isn't us or me like patting my back and saying, everybody was an idiot for getting in this. But at the time, I kind of saw the same thing with Oscar where I'm like, man, so much of this business. I actually think that if I had to invest in health insurance, I would pick Oscar over UNH, even at the current price levels. But it just wasn't a space that really interested in me. And you can see that there was a lot of times when it just started pumping and started going, and it still might. Like it's a decent company, but all of these have been hit really altogether. I mean, this is down 5.5% year to date. It's actually closer to flat than UNH, so that's good for them. So a lot of different opportunities. You don't necessarily have to even buy the leader there, if you're interested. But yeah, there's something to swing trades, but long term, that's not a space where I want to be in. Plus, it's a space where like trying to figure out the insurance reimbursement rate and Medicare and Medicaid and regulators and different bills. It's like it's so boring to me, honestly. Like if you guys like invest in that style and it works for you, that's great. But it's hard for me to put money in something where I'm like, I just know I don't have any attention or focus it's even going to go in there. And there might be companies where people look and say like SoFi, Nubank, PayPal, where it's like, oh, these are really boring companies, and don't invest in them. It doesn't always have to be exciting, but you have to at least be willing to put in the work on the front hand, and as you own it, whatever level of due diligence that you need. But it'd just be hard for me to do that.
You know what? If there's one insurance company that I would go in, it's not UNH and it's not Oscar Health. And I don't know if you know what it is, but it's going off of these parts. It's Lemonade, baby. Yeah, that company is on fire, and I'm not in it right now, and I feel sad. I feel like I'm missing out a little bit, but I got into Lemonade in $32, I think $31. I got into it at 18, first of all, but I was buying in the 50s, and my cost basis ended up at like 32, and I got out when it was 75, 76, and so in a very short period of time, intra year. And now I feel FOMO because I think it's going to go much higher. But I think,
yeah, dude,
I don't know, man. Maybe they take a breath, but maybe not.
I didn't remember that you exited completely. I think I remembered that you were like reducing and taking some gains. That's I think how you worded it. But there's a lot going on with Lemonade beyond just what they do. Like what really got my attention last week was their announcement on full self-driving. So this great transition, by the way, Tevis, right into Tesla and Lemonade. They announced last week that based on their data observed from full self-driving, that they would end up reducing premiums for full self-driving users by 50%, which gets a lot of attention. Now, some naysayers at the time were saying, and I've never used Lemonade, so I couldn't say, they're like, oh, this is just because they're going to jack up the prices and then say it's 50% off. I mean, that's a common retailer trick, frankly. But we actually had some reads on this. And so this is not somebody I think I even follow, but Smolatom said that they got a quote from Lemonade with the 2 Teslas. And so there's some things to work out. So one is they mentioned one of them saved them 50% off for full self-driving. The other didn't. I don't know if that's a hardware stack 4 versus 3 thing. I wouldn't think so, but maybe that's the case here. But anyway, he priced the coverage out actually 2 weeks before, and it was significantly more so back then. So they weren't just saying, hey, we're going to jack up all the prices and say it's 50% off. And so from $225 to $150 a month, is actually extreme. Now, Lemonade is not in every state. They are in Texas, and I recently went through this with my middle son. He has a car now, and we kind of helped him a little bit with that on the front end and insurance and everything. But there was a definite cutoff period where it's like, hey, this is your vehicle. You need to get everything figured out. So I helped him with that. And I didn't price through Lemonade. I went through a different platform. I kind of wish I did now. It's not a Tesla, by the way. He's just driving an old beater car, the Nissan Versa. But regardless, like, it's such a headache going through. And I have searched at Lemonade before, by the way, before I think they were in Texas. But anyway, yeah, they seem like that they're doing very well. Now, beyond Lemonade, let's talk some Tesla. So that announcement, because I'm a Tesla shareholder and you own even more than I do, plus I own 2 Teslas and I love full self-driving, and I've greedily wanted to buy more Tesla, and the stock just will not cooperate in falling enough. And I'm not sure that Q4 earnings will give us that. But so 2 pieces. One is on autonomy. A couple of things happened. One is they've removed that engineer that's in the front seat in Austin. So the robotaxis are real now because it's just a passenger in the vehicle. Second, we see the full self-driving news from not even somebody that, needs to pump Tesla or anything. They're just like, hey, full self-driving is legit. We're Lemonade. We'll give you 50% off. That's amazing. And then, of course, earnings are happening this week. So where you're at with Tesla, Tevis, are you closer to, you can't just say hold. Are you closer to adding shares? Or are you closer to saying, hey, if there's a spike, maybe I'll sell some more?
And I'm actually at my lowest ever allocation of Tesla than I've ever been in my life. I mean, in maybe the last 4 years. There was a time back in 2019 and 2020 where I think I've told this story before. Like, I was buying 1 Tesla share for every physical Tesla I saw. And that was before COVID. So I was like going into the office every day. And I was like,
money, man.
But you know what, man? Back then, Tesla was not trading for, it's done many splits. I think like 2 or 3 splits since then. And then the 2020 split, I think, was like a 10-to-1 split. But even still, I would see a Tesla like every other day, maybe 1. And so at the end of the week, I would tally up, okay, how many did I see? I got to buy, 7 Tesla shares. Okay, I got to buy 13 Tesla shares or whatever it may be. And that was like cool. But very quickly, that game became unsustainable for me. And then keep in mind that at some point, Tesla was over 50% of my portfolio. It was like 55, 60%. And right now, it's like low single-digit percentages. I think 2 things. I hope 2 things. I hope they get absolutely demolished on earnings, because I would lean closer to buying than to selling. I don't think I would, because I think if I sell, I would like sell completely because it's just not worth it. If I trim even more, then it's just not worth it for me to. I would rather just sell it all. But I do want to add more. And I think 26, 27, 28 are going to be good years, especially as the Optimus comes more into the forefront of investors' attention. They're going to start to price that in, or at least have stronger anticipations around it. I just really hope for another dip into the 300 so that I can pick up some more and then be on my merry way. But it might give it to me. It might not give it to me. Tesla's a fickle thing.
Yeah, I mean, that stock, it runs not on fundamentals, but on narrative. So, I mean, even at 350, I'd actually want it to come down a little bit more too. But this is why we might actually get a dip. So this is the expectations. Now, quarterly is not usually as good as annual, but this is a well-covered company, so you can see the number of people or analysts that have projections. Look at the revenue trend, and they just keep revising downward, and for good reason. This is what they're expecting right here. Consensus is around $24 billion in terms of revenue. For Tesla, it's, of course, a step down from Q3. This is odd, but it's really not that strange, simply because that demand lever that was pulled by the expiring tax credit, plus another couple of things too, is really leading to a very unusual Q4. So year over year, this Q4 is going to look absolutely ugly. You can see where they actually came in last year versus where they're expecting this year. It's a big drop. And the range is colossal. So this might be priced in, but I mean, like if we look at the stock price, well, we're not going to look at the multiples or anything, but let's just look over the last year. This thing has been on a tear, and it was down briefly in the 220s. Oh, the nice thing about Tesla, by the way, is it does seem like it likes to give opportunities. And so, like, I think for the last 3 years, we can look and we can see massive run, opportunity, nice run, bit of a pullback, no big deal. Of course, here it was 232, 293, down to 142, all within, like basically a year. So could we be looking at Tesla that's in just as good shape or maybe even better than where it's at right now, trading at a healthy discount? I think that there's a possibility. Do you think this earnings is going to give us that, though, Tevis?
Fingers crossed, man. I don't know if it's earnings. Like, usually what happens with Tesla is they report numbers, they miss. The last, 6 out of every 7 quarters, they've missed numbers, and we can look at that to verify that claim. And so they dip. And what happens is Elon goes full pump mode, and he talks about how it's going to be more than all the next 10 companies combined, or whatever the case is going to be, half the GDP. We won't even be able to comprehend what an economy is, yada, yada, yada. And the stock pumps and generally opens higher the next day. That's the story with Tesla. That's the expectation for earnings. It's not numbers driven, it's narrative driven, and we know that. So again, I don't necessarily know, like, okay, the numbers are going to come in bad, and they're going to talk purely about the next, 18 months. How the stock is going to react, I don't know.
Yeah, and really, I think that the market is very focused on full self-driving robotaxis and Optimus more than vehicles. Vehicles are still important; they still make them money as well. But yeah, I love the vehicles. I got 2 of them.
It's interesting with this, Roy. Like, I wonder if SpaceX going public is going to be one of the catalysts to drag Tesla down.
That could be.
The investor base is very similar. I mean, look, you're investing in a company where the numbers are not there. And in order for you to be putting your money behind the narrative, you need to be bullish on, Elon, essentially. And okay, like, I have Tesla shares. If SpaceX goes public, I might diversify a little bit outside the Tesla shares and buy some SpaceX. It's a thought. I'm not sure when SpaceX is going to go public. I'm not sure what the valuation is going to be, but I could see it pulling some capital outside of Tesla into SpaceX.
Yeah, I mean, that's always a possibility. It wouldn't be too surprising, honestly, because I don't know. I actually don't know any Tesla shareholders that wouldn't like to have some SpaceX when it goes public, and they may not go all in. Myself, my Tesla position is so small, I can't reduce it further. I just exit at that point, and I don't want to exit. So it'll be interesting, but yeah, that could definitely be a draw or a draw over it. There's a lot of different catalysts that can. Elon can also be his own worst enemy and cause the stock to plummet. It's always a wild card. I do see some, by the way, some comments on Rivian, and we might hit those in the Q&A period, but I did do a deep dive with Murkesh, who is very into Rivian right before Autonomy Day. It's more than just a vehicle company, guys. It's basically a mini baby Tesla. I don't think it's going to have the same upside and potential, but they're more than just a car company, and I hope that they succeed. I still, it's one that I'll keep my eye on. It's not worthy of an investment at this point for me personally, but maybe in a year or two.
There's just too many things to put your money towards, man. There's not enough dollars, and like after a certain point, you just buy an ETF at that point. Like, yeah, I have this short list going now of some ticker symbols, and it keeps growing. And I'm like, okay, I want to be in all of these, but at the same time, like, I don't feel comfortable with my sizing in Amazon and Meta yet. I want to have more of them. And
have you done a video on that small list of things that you're looking at as candidates for positions? I will watch it.
It's not worth it. It doesn't perform.
Okay. Well, do you mind showing it?
Maybe like members only. Okay. Well, I mean, on the watch list,
yeah.
Lemonade is one that's on the watch list. Figma is another on the watch list. EOS Energy is on the watch list.
Mm-hmm.
And then those are definitely there. I think Duolingo is on the watch list just so I can keep a track of of its price. Zeta is on the watch list so I can keep track of its price. And PayPal, $55. Jesus Christ. So
PayPal, we're going to talk about that, I guess, right after, I guess, the other hyperscalers.
Yeah, so that's basically like the watch list. It's just names that I think might be interesting, / names that have been beaten down, / names that maybe I was in a month or so ago, and I just want to keep track of what the prices are at.
Yeah. All right. So beyond Tesla, this week is earnings week for NVIDIA indirectly. Of course, NVIDIA actually goes much later, but there's a lot of massive companies that have direct ramifications as far as how they report on NVIDIA and many others in the iPlay. Oh, yeah. So we've been actually Tuesdays. Usually we had some travel around the same time and some scheduling conflicts. So we moved it to Friday. Tevis, do we want to talk about Friday?
You want to talk about now? We can.
Yeah. So
yeah, go ahead.
Go ahead. I like you doing.
I mean, look, we were talking about potentially doing a Friday 6 p.m. show, and we were thinking about what might that look like. Of course, we have the show with Steven at 9 p.m. So it would be double dipping on Fridays if we were to create a new show at 6 p.m. One of the things that we love the most about this show is the question and answer period. And that's usually something that takes us late into the show. I mean, the show lasts for 2 hours. I mean, usually, I think the average for each show is like 90 minutes or so. I can pull up my analytics, but like the average for bootlegs is close to 90 minutes. And that's because we try to keep 1 hour for the show and we try to do questions and answers. And recently we've been capping it at 35 questions or 30 questions just because you guys ask us more than we can answer, and it'll never end. And so the thought process behind Friday is we wanted to do a show, potentially, this is still TBD, guys, but potentially do a show called, what were we calling it? Friday Fiesta?
Fiesta Fridays with Ron and Travis.
Fiesta Fridays with Ron and Travis. And it would be a more sort of laid back show where, maybe we react to certain clips and we dedicate that show to just Q&A. And as a result of having that, we would remove Q&A from Bootleg. Now, I'm not sure how that would be perceived or how it would perform, because I think part of the Bootleg charm is that the topics that we talk about prompt your guys' questions. And so if we had just an AMA type of show every Friday, it might not be as dynamic as Bootleg is because we would still need some topics. But this is essentially the thought process. I mean, Roy and I think this is the longest conversation we've had about it. We're doing it on stream right now, but we definitely want to have a more laid back show because we really enjoy the dynamic that what we fostered and built here on Bootleg. And so I don't know. I would be curious to hear your guys' thoughts about that. Roy, what do you think?
Yeah. Beyond that, we may have the occasional like topic that we do touch, but it's more condensed than Bootleg. Focus more on Q&A and interaction with you guys. Would be a shorter show as well. Sometimes Bootleg goes 2.5 hours long. This one's more like the 1.5 hour long. And yeah, it doesn't have to be related to investing. You guys can ask about Roman history. I can talk a lot about Roman history, Russian history, history of the potato. That's a good one. But no, on a serious note, like it will be more of a grab bag type of style. Still would do investment questions, and we're not giving financial advice. We can give our opinion on certain companies and tickers and opportunities. So yeah, if I know there's a few people that are new, and we appreciate you. I'm Roy. This is Tevis, but it's kind of an inside joke and meme at this point where it's Ron and Travis instead of Roy and Tevis.
I think there were some new viewers that are like, oh, what does this Travis dude on screen think about things? And we're like, all right, we're running with that.
Absolutely, Travis.
Ask our degen questions. Yeah, so that would be the thing. Like, so here's the thing, guys, and like full transparency, cards on the table. Both Roy and I are doing YouTube part-time, okay? And as a result of that, unfortunately, there's only a limited amount of time or cycles or hours per week that we can dedicate to live streaming, because we also make our own content. And so ideally, we would want to keep the bootleg questions and a new show, but that would really balloon the amount of time that we're spending on live streams, because just the two of us, it would be, let's say, an hour and a half on Tuesdays for bootleg, right? Consistently, maybe an hour for this new show, but realistically, it would go closer to an hour and a half, but let's say an hour. And then we have another hour and a half for the Friday night show. And all of a sudden, this is like a part-time job type of hours that we're pulling in. And so we wanted to basically see if there was a better composition that the hours could still add up to the same amount every week, and we could split it up in a better way. So
Yeah. Even a little bit more is fine. What we don't want to do is make this show worse, and so probably Q&A will stay. It may just be a little bit more condensed, which is probably better, honestly. I tend to talk a little bit too much, so
yeah.
You do have a little bit of resistance.
Maybe that's it though, Roy. Like maybe we just cut the Q&A to, we say, hey guys, the cap for questions is 10 or 15, and that's it. First 15 I see are going to get bookmarked. The rest are not.
Yeah. We'll try a few things, but yeah, I think this show, like, it may not, won't be coming. It may be a few weeks before we figure out what we're doing, but we'll announce it when it's close to time. And I think it's extremely likely that we do this because I like hanging out with this guy and I like our audience too. This is, like, honestly, like what Teva said is true. We do make a little bit of money off of YouTube. It's not much, but we appreciate every cent of it. The biggest thing is, like, we do this for enjoyment, and it's very enjoyable. So, all right. Let's go into a little bit more on earnings week as well. And just, I don't know that we want to go deep level in any of this, but this is NVIDIA's earning week, kind of. It's the preview edition, really, because it tells us exactly what's going to happen with NVIDIA, all the hyperscalers. So you can see a lot of reads here. Of course, we're on Tuesday, and so these have already gone. But tomorrow, ASML, Microsoft, Meta, Tesla, of course, that we already talked about. We have MasterCard and Visa, which are great reads on the economy, and also Apple. And of course, this little known company. Ever heard of it before, Tevis?
Oh, SOFI? What is that one?
Yeah,
I don't know.
I think that they like sell board games or something. Like they have a tic-tac-toe little thing there. Not sure what they do. Of course, SanDisk and Western Digital have a lot of attention to. But aside from SoFi, because we're going to talk about that in just a second, what earnings really has your attention from these, and why are you looking or focused on that? Is it like a read into other stocks that you own, or are you looking at a position?
Meta, baby, Meta. I want to add more Meta. I'm really nervous because I don't want it to blow through my covered calls, and I think it absolutely might. So I really want to add more Meta. So I think the best case scenario for me tomorrow is if Tesla shits the bed and if Meta shits the bed, I will be a happy camper, bro.
But not SoFi.
No.
Yeah.
I think SoFi is going to be just fine. This is hilarious. Really playing off the Pedro Pascal thing. Yeah, man. Put Sydney Sweeney next to me, and I'll not be anxious anymore.
But by the way, before we get into SoFi, Lending Club is also, I think it's just a weaker company than SoFi. And it's not a one-for-one comparison, but it is a pretty good comp. This will also perhaps give you a little bit of a read as to what SoFi will do, although I think it's going to be a blowout. So beyond Tesla that we talked about, because I'm a shareholder, Microsoft actually for me is the one that I'm maybe a little bit most interested in. So Meta, I can't touch that company. I'm interested to see what it will do. Microsoft, though, has been caught up in this software as a service, and software is terrible, and we want to get out and be out of it. Yet, they continue to put up quality quarters. They're improving their product as well. And I really think that the direction that Microsoft goes or reports is like the biggest question mark. Like I think there'll be a solid earnings, but could there be an upside potential and surprise? I think so. And that may translate into everything related to the AI trade, which has kind of been stuck since September. So I have my eye on that. Meta, I'm hoping Zuck continues to pound the table and say, yes, we will continue to buy every single thing out there from NVIDIA and AMD and a few others, because, hey, that helps fund my investment. But it'll be an interesting one. All right, so let's then...
I think somebody just rated us, because I saw my viewership just spike. I don't know if you saw your viewership just spike, Roy. So let us know where you guys are coming from, because I appreciate you guys.
Amit sent some over, so it might be him, might be others as well. But yeah, appreciate you guys. Welcome. All right, so SoFi reports on Friday. Usually it's Tuesday, just so that they can mess with me. And Dan Dolev as well, because we both cover PayPal and SoFi. Not really, but a little bit different a shift. Friday before open, so we will be covering that live. We did our predictions. Let me pull up my predictions, Tevis, and then yours as well. Tanner also did a really good video where he broke down everybody's, including stock goats, which I thought was really good. Okay, you were a little bit more conservative than mine, but you didn't include the one time from Chime.
Yeah, man. I reposted my my predictions thing. Like I just retweeted it, and I said, guys, like, hold on, I think I have it here. I said, in retrospect, here, maybe let me share my screen, because this is your influence. You absolutely. So I posted on January 23rd, and then I said, oh, sorry guys, I'm an idiot. Forgot to include the $33 million from Chime. Tech platform could pull in over $140 million this quarter. This is not accounted for in the predictions below. Even bigger blowout than before. Go ahead, Roy.
Yeah, so mine did include that. I think we're all about the same ballpark on corporate. Tech, of course, I was actually the highest. The Chime 33 million was a big part of it. But I do think that they start to get some revenue as well from some of the others that are onboarding. T-Mobile, United, Southwest as well. A long pipeline, so it takes a little bit. I might, in hindsight, probably I'm maybe 5 million high, maybe a little bit higher too. Financial services, I was actually a little bit lower than a lot of people. And lending, my number was ridiculously high compared to your guys's. I went through and largely, like this is from Fiscal AI, and I just pulled and stacked the revenue with corporate removed. And largely what happened here, well, actually, I have another post where I looked at originations, and I can pull it up again if I need to on Fiscal AI. Okay, yeah, nope, that's not it. My apologies. One right here. Yeah. So my hypothesis is basically that it was a high likely event that they were going to do a rate cut in December. Of course, they did. That's really good for lenders, especially if you lend before the rate cut, although it's not a one-for-one, like it becomes terrible right after. The other factor, of course, is last two times there's been capital raises. And I want to talk to you about capital raises and also guidance next. So right here is before the capital raise. They actually hit right before or right after this earnings in July. So, but you can see how greatly they accelerated as far as lending originations on personal loans into that capital raise. And yes, they originated a little bit more in quarter three than quarter two, but I think that we see that same kind of meaningful increase because they're like, hey, macro is favorable. We're having rate cuts coming up, and we know that we're going to do this capital raise. Let's just go gangbusters. And lending is one of those, like financial services benefits from this too. Loan platform business, after all, falls under that. But this is an easy way for them to be able to accelerate revenue. And because of those PSUs, they need to, if they want to hit those 45s, much less the 35s as well. So any other thoughts on this or the numbers? And then let's talk some guidance and let's talk some dilution.
Yeah, look, what I will say about SoFi is that I think the market is going to, it's going to be a blowout. All right. I think pretty confidently say it's going to be a blowout. Their numbers are sandbagged to all hell. And it's just a matter of how big of a blowout is it going to be. I think maybe the one-time Chime fee is going to catch people off guard. The street is expecting 12 cents. There's no way in hell they're coming in at 12 cents. The thing you have to keep in mind, Roy, is that if they had a blowout as well due to a one-time benefit last Q4, I believe it was. And that was as a result of some tax reasons. They came in at like 38 cents or 39 cents or something. The real question here, and by the way, when that happened, the stock obviously faded away. It fell. It was like at $9 and it fell down to like $8 or whatever. The real question here, guys, the determining factor is all forward-looking guidance. That is the name of the game, point blank, period, end of sentence. That's it. Guidance for the full year 26 and maybe 27, 28. That is going to be the determining factor. Where do they come in off that 55 to 80 cent EPS range? My guess is they're going to readjust to say top end of the range, like 67, 69 cents-ish, 70 cents. And what are they providing for 2028, let's say, right? $1.20 to $1.50 EPS for 2028. Okay, how are you going to get there? A, B, C, and D. That's going to be it. Because right now, SoFi has sort of lulled the street into this false dichotomy that they're always sandbagging and then beating and raising, and it's not impressive anymore.
Yeah, it's there are a number of companies that do this, but SoFi, I think it's one thing to have measure of safety, margin of safety, because you're giving a read well into the quarter, but things can always shift and change. And the worst thing you can do is overpromise and underdeliver. The market really punishes that. But they have a colossal gap between what they actually do versus what their own guidance is. And it's really funny. Like I noticed this quarter that SoFi's guidance is probably about as bearish as any bear is on SoFi. And like, honestly, I appreciate you, Keith. Honestly, like it's pretty sad when like bearish analysts, they can just say, hey, I'm just saying the same numbers that SoFi is. But we all know it's bearish because they beat and raise every single time by a lot. It's not just a little bit anymore. So I do think that they should be a little bit more aggressive, especially if they see, and everything that I'm seeing indicates this, that it's a pretty favorable macro right now, especially for lenders. Why not go for it, both on the capital front, but also on the guidance front? That could cause a surprise. Now, my guess, though, Tevis, is I think that they're just going to do it the same as always. It's going to be sleepy guidance SoFi, although it's going to be a really good year, so that guidance will still look quite attractive. But I'd be a little bit surprised if they change that. Now, I think that the other wild card factor is we saw dilution midsummer after Q2 earnings. We saw dilution after the previous earnings as well. First one, I really didn't like the timing of. I thought it was really mistimed and terrible. This last one, I was like, I'm fine with it. It's good. Do you think that they hit us again with a capital raise right after?
All right. There's two things I want to clear up. Where was dilution question? Yeah, here. So I'll cover this. The dilution is accretive, guys. I know it sucks, and I know the stock trades down as a result of it, but it's every single time that they've diluted so far. And yeah, granted, we don't know what they're using the July dilution money and the December dilution money for. I get it. I'm with you. I would want some clarity on that too. But prior to that, they have diluted multiple times in 24, 23, and 22, and every single time has been accretive to shareholders to pay down debt so that EPS looks better and acquisition funding. I'm sure they can dilute again. I'm sure they can, but if they do, it's going to be opportunistic, right? So if the stock pumps, they're going to dilute again. But I think the reason why I wouldn't bet on it over the next 6 months, Roy, is entirely because of the PSUs. I think if really that was something that they optimized for and they want to hit the gate swinging, then they would announce some type of acquisition or partnership or something big, something that gets the market excited, and try to pump as much as they can for that 90-day window and then probably dilute in June. That would be my best guess.
And like regarding this being a bank, that money just doesn't sit there. And that's one of the reasons why I'm like, hey, they're going to lend like crazy, because that's what banks do. They can lend multiples against that, depending on the type of loan. Like personal loans, usually there's not really collateral, so the multiples are a little bit less than would be like home loans or even student loans. So this is the share count. And this, I mean, like, fair enough. Like, if people are like, hey, dilution's terrible, I don't like this. I know that this might be a little bit hard to see. I don't know how much I can zoom in here. I guess a little bit. This has ramped up a lot. Yellow line, by the way, is showing the change year over year, basically in share count. And when you're at double digits, unless there's like a tangible reason for it, and there has been for SoFi, although I still don't like the first raise that they did. You know, it's fine. So like, if they end up diluting and they buy a very attractive company that helps them grow very well, great. Here, basically, I think beyond what you said, Tevis, if they dilute now, a lot of shareholders are going to be very frustrated, myself included, because they have a lot of cash. You don't dilute to raise cash for optionality if you don't need it right away. It's just sitting there. It doesn't make sense. So I think that we're safe for at least 6 months. Now, after Q2 earnings, this will be in July, I think that they might do another raise because they are on the other side of the PSUs as well. But yeah, they have more cash than, I'm not more cash than what they can do with, but it does take a while to lend that out or to repay debt in those credit warehouses. But I don't want to see this continue like at 11% dilution every year.
1000% agree. And let me add one more thing to that, Roy. I think if they do third quarter in a row dilution, they did in July, right? They did in December. If they do it again at the end of, January, February, I think it's going to create a trend. It's going to create a pattern in people's minds. And it's going to lead to more scrutiny and more questions around what do they need this money for? Because in the past, when they've done this dilution, it's been opportunistic. We're raising this money and we're entering into this capped call transaction, and we want to pay off this debt that's maturing and increasing, our fee, our payback. And as a result, it's going to be accretive to EPS. And as the capped call transaction is going to offset that dilution. Cool. Yeah. Love it, guys. Keep going. If now they dilute once, you're like, oh, it's fine because they've done this stuff before. I trust management because they know what they're doing. If they dilute twice, you're like, okay, that's interesting. What are they using this money for? I still trust management, but I have some questions. If they dilute a third time in a row, you're like, all right, what's going on here? Like, guys, what do we need this for? So I think it's going to be 3 times in a row.
Yeah, especially you given fireside chat with Crystal Point right before the CFO, and he's like, hey, we got all the money we need. We don't need to raise. And then the next day they raise. It's like, guys. Now, it did include what he was talking about there, optionality. And it's fine. Like, honestly, I think it's very accretive. But yeah, I think that we have at least a 6-month pause and maybe just one raise this year. We'll have to see. Like, honestly, if we see them do what I said as far as lending, I think that dilution is more likely than not midsummer. But again, like, if that's the case, SoFi is growing 50% year over year plus, which means the stocks will be much higher as well, or it should anyway. Yeah.
It's so I regret to inform you guys, unfortunately, we're already at 31 questions bookmarked. This is the dilemma we find ourselves in. So I'll probably bookmark a couple more, and then I'll probably cap it around 35. And how does that sound, Roy? Do you want me to cap it at more or less?
No, I think that's fine. I guess real quickly, maybe we skip the Google OpenAI stuff.
Sure.
We can save that maybe for Steve. I'm going to bookmark that for later because it's really interesting what's been happening there. I do want to touch PayPal just because they report. We'll get to see the aftermath actually next week. So they report on Tuesday morning. And so we'll cover Bootleg Tuesday night, and I'll be crying or cheering. Maybe both. Yeah. Salesforce, they won a massive contract the other day, but yeah, it's just weird, man. Anyway, PayPal, the one nice thing about it. Well, let me bring up the stock actually. I'll just stay in fiscal AI because it's easier. All right, so let me bring that up here, and here's the share, the stock price. It's down 4.5% this year. Over the last year, worse than an opportunity cost, down almost 40%. Just has been pummeled and beaten down. a lot of interesting announcements. Otto Abasi Williams, who they've hired over the MENA region, is like absolutely killing it, and they're thriving in that area. There's a lot of exciting things coming online, advertising and so forth. They've been really hit by macro, the de minimis being removed as far as, well, I won't be going into here long. Really hit them. Branded growth has slowed. I want to show you one other thing here. So this is estimates, because this tells the story of PayPal. We'll leave it on annual. You can see that this is downward revisions again and again and again for revenue. You can look at EPS as well, though it's not nearly as bad because of the buybacks. Now, they are guiding, of course, for some growth, but the growth is lackluster. The execution has not been nearly as good as I expected. They're a lot weaker as a company in some areas. Now, some areas are very strong. And there's a few, opportunities as far as the upside. But the one thing that I like here, Tevis, is expectations going into this are absolutely dismal, horrible, horrific. You look at the actual numbers, they're pretty good. And PayPal, even with the comments that they said on the fireside chats and on the earnings as well regarding branded, they're like, hey, we're still well within our guidance. So I like a chance for an upside surprise when you're going in with just dismal expectations and a stock that has sold off for an upside surprise. That's saying I'm not buying more here at 55. I wouldn't buy more at 45. I wouldn't buy more at 30, maybe at 35. It's not going to get that far, though, just because this thing could be an opportunity cost for a long time. And I need to see a higher cadence. They've done well in announcements. Now they have to build on it. They've not really guided with any new products, and their execution has been faltering. So this may be a quarter, Tevis, where we see an upside surprise. The stock pumps, but I just don't like what I see as far as execution, and I sell anyway. Maybe completely, more likely than not. Baseline, I would say I'm probably reducing after earnings.
Yeah, I just love the complete just gut adverse reaction that the chat has every time PayPal comes up. It's if that isn't a sign, I don't know what is. Alex,
I mean, like sentiment is like basement level, and I think we've already had our capitulation event. So, like if I had to pick between UNH and PayPal just to swing, I would pick PayPal, just because like it's gotten everything negative feels like it's priced in. It still sells off a little bit.
You know what buying PayPal feels like at this time? It feels like that rich dude that bought the banana taped to a wall as an art piece and then just removed the tape and just ate the banana. Like that's how it feels for your wallet if I buy PayPal over here. It's just like, just burn it. It's I don't know.
Can you throw up
I hope they do well.
Can you throw up Matthew Johnson 425? Yeah. This is not shareholder fatigue. Shareholder fatigue does happen. It's a real thing. I just don't trade around emotions. Bottom line is, like, when you see a company that makes a lot of excuses on the macro, sometimes it's real. And I think that like 90% of it is real with PayPal, but it's almost always an indicator of like, this is not that strong of a business, at least right now. Alex Chris has made some missteps, but I think he's a very good, capable CEO. But bottom line is execution has been lagging. Like they'll announce things and they'll say, hey, this is coming like later this year, and it doesn't come. They don't give us a read on it. Or they'll announce really amazing things like ads, and they'll just bury it. Like Dr. Grather, the architect for the advertising, which should just be a layup for PayPal, and I think it will be. He'll go on things where like they'll get like 300 views. Like that's it. Versus they won't mention ads or anything on earnings. It's like, what are you guys doing? They're not guiding on any of this. It's like, what am I supposed to do? How are analysts supposed to react? I don't blame the analysts at all. When PayPal themselves is like, hey, we're going to guide very conservatively. We're going to talk about how bad macro is. We're going to talk about how many missteps that we've made, and also a few things that are working, and not mention any of the new stuff, not guide on it at all. Analysts can't do anything with that. They're not fortune tellers. So, and their focus is all on branded. Like that's the thing is, PayPal has not shifted that. They need to accelerate it, and I'm not sure that they can meaningfully.
I freaking love
these comments are great. So anyway, that's enough of PayPal. maybe enough of PayPal, like, but yeah, this is not a reaction as far as like I'm frustrated on some things for sure, and the stock price action is one, but it's more than that. I get excited, frankly, when a company improves and it sells off anyway. I love that. That's not what's happening with PayPal. It's selling off because it's gotten weaker.
Yeah, yeah, exactly. Somebody said, "Jesus, Roy, I never hear you fired up." Katie, you're exactly correct. And dude, I tried my best to make some noise and say, "Hey, Alex, this is a retail investor that, for whatever reason, still likes you guys. Please go on another interview with him." Nothing. It's weird, right? Because I remember with PayPal, like they were hiring this role. What was it? What was it called, Roy? It was like chief social media communicator or something for office of the CEO.
For the office CEO, yep.
And it feels as though PayPal has gone in the opposite direction. Like Alex Chris was doing so many more interviews, and they were excited, and they were talking with the retail audience, and it seemed like he was answering a lot of things on X, and like now I don't see any of that. And maybe that's just my algorithm, and he still does it, but yeah, I don't see any of that.
Yeah. I mean, like, it was really weird. Entering earnings 2 cycles ago, so this is almost 6 months ago, lots of communication. It was uncharacteristic. I'm like, this is really cool. I like this. I could get a good read on that. When a company goes almost radio silent, I mean, it's not quite there, but it's pretty close. And you have to look for like the Dr. Mark Rathers and the Otto Abasi Williams type of people on LinkedIn just to be able to find any news on the company other than like the official shirt. It's like, that's not great. So it feels, I don't know. They pulled back for some interviews too. Like right now, I'm not the only one that's been reaching out trying to get interviews.
Mm-hmm.
I've given up now. I just have. Like they were very open to it. We lined some things up, ended up not working out. And then this whole shift, I'm like, I don't know. Like we're in the dark. Am I supposed to just close my eyes and hope? Hope is not a strategy. I think that they'll be fine as a company. They're not going away. It does feel like, this may be the floor, at least close to it. It can always fall a little bit more, but I just see better opportunities in the market. And so according to that, like if I'm like, hey, I need some money, HIMS is vulnerable being actually just cut entirely at this point, although I do want to hold that into earnings. PayPal as well is another one. Oh, no. Dan is the reason why we're in this mess.
I feel like they're just trying to rage bait you at this point.
Dude, Steve does it unintentionally. If you guys aren't following, like on FinTech Fridays, back when we had FinTech Fridays and Tanner was part of that show, we give the gift exchange. And the artist formerly known as Tanner.
Yeah, I don't know anybody by that name. It's weird. He must be sleeping.
Steve was going to give me Verizon. You remember that?
Yeah, I do. Well,
after he gave me Block the previous year. A big part of my thesis is leadership. And man, when you have terrible leadership in your company, even if it can run it by itself, what are you doing? Like if anything changes at all in that business, they're just not agile. So, yeah.
All right. Let's now go into some questions.
Yeah, let's do
that. You guys know me too well because I have 36 questions bookmarked instead of 35. And I'm sure I'll eventually bookmark some more if they're interesting enough. But thank you, everybody, for all your questions. Thank you for being here. Drop a like if you do enjoy this. And, let us know what you think about a potential Friday show with Ron and Travis, our alter egos. Sagig starts us off. What do you guys think of EU-India free trade agreement? Personally, I thought it was inevitable. We'll see stuff like that after Liberation Day. I think I have a take here.
Go ahead.
Maybe I'll start and then look. I think the U.S. has deliberately or inadvertently done the absolute best job possible of creating and breaking down barriers between other countries. Like India is opening its doors to China for trade for the first time in decades. India is opening its doors for the US, for Europe. and other countries are trading that previously you wouldn't have thought that they would have alliances, and it's all as a result of the tariffs. It's very much enemy of my enemy is my friend type of scenarios. And I think Trump is trying to flex the US's negotiating position. And in many cases, it's working, absolutely. But in many other cases, I think people see the strong counterparty risk that the US is presenting right now with the administration. And they say, hey, look, we don't want any trouble, guys. We'll play by your rules. We'll do the tariffs. And like, you know, but they're also then going and looking at other potential ways to salvage their own trade relationships. And unfortunately, it's not going to be the most sustainable thing for the US over the long term. And it's going to definitely encourage some alternate competitive streams of trade.
Yeah, I largely agree there. I mean, United States is still by far the largest market in the world, and companies and countries will want access, which is big negotiating lever that Trump has used. One of the fruits of this, and I don't think this is like 4D chess or anything like that. Maybe it is. Who knows? If this ironically leads to more open and free trade agreements globally, man, that's a really good thing for investors and investments overall, I think. Even if it's, a slight loss for the United States, or at least not as good. I'm a big fan of free trade. Now, I do think tariffs have their place. I'm not going to go into like the political side or political theory or anything. But man, I don't really like them just being used bluntly like they oftentimes are. So yeah, I like it.
Yeah, and I think this user Big Beard brings up a good comment here. I actually covered this piece of news specifically in my latest Nebius video, and quite frankly, it's kind of interesting with Nebius being in the position where they are, because what's happening is Trump is lighting a fire at Europe's feet to move a little bit faster and not be so tied down by their regulatory frameworks. Europe is traditionally notorious for overregulation, and as a result, nothing gets through. It's just a sea of bureaucracy. And as a result of what Trump is saying, the waves that he's making, he's mobilizing all these countries that have been asleep for so long, whether they're an ally or an enemy. It's what he did with Greenland. It's what he's doing now with free trade. It's what he's doing with tariffs. He is basically putting a fire at their ass and making them move, making them hustle. All of a sudden he's like, hey, if you guys don't want Greenland, I'll take it. And they're like, no, hold on. We'll send 13 soldiers over there. It's no problem. And I don't know if that's deliberate. I don't know if it's, an unintended consequence. And I don't know how long it's going to last. I'm just calling out the facts as I see them.
Yeah, Nebius is like a good call out there. And if you remember when Manuel pitched Nebius, I was just swing trading at the time, looking to maybe part of what I was really interested in is like, hey, I know they're building in the United States, but man, they're a European company, and that could be an advantage in this type of environment. But the problem is beyond Nebius. Now, Nebius, I'm really interested in creating position in that to be one of my answers for an upcoming thing here in just a bit. But for like outside of that specific company, most European companies do not stack up to United States ones. And so what would happen then is just basically going with an inferior company, inferior product, inferior technology, maybe inferior price point as well. And I don't think that they can do that by and large. And Nebius only can handle, like, really, you're starting to see data center contracts. And this is why they were up some today and CoreWeave was up a ton, because instead of having contractual obligations like for 2 years, they're going out like 5 and 6 years now, because they're like, hey, demand is insatiable and we just need to go further out because our customers are demanding it of us. That's a really good thing for all of these. So even if some are like, hey, we're going to prefer and go after Nebius, great, that's fine. I don't think that puts a dent in the hyperscalers. And then, some pushback on other tech companies like Palantir is one. Palantir's already struggled internationally outside of really South Korea and the United Kingdom as well, in Europe. this type of stuff doesn't really help. But honestly, I think Palantir, I don't think it really changes much anyway. Palantir is best in class by far, and there is no like you can look at Helsing, it's probably like the closest thing that Europe has to something that even mirrors Palantir, and I don't know that they even have a real product yet. So like there just is not a one-for-one comparison there, and for most of these it's true.
Here's my thing, Roy, and like I agree with you 1000%. The US is the best game in town. Yeah. How long is that going to continue to be the case if all of a sudden you're yourself pushing your customers away? And maybe it's like, hey, there's no alternative and we still have to go to the US for insert whatever product here. And that's the status quo. My point is, the rest of the world, the way that I see it is like the rest of the world has been asleep for so long, and you're just now like poking it, right? And okay, you're going to run a race. If you want to win the race, it's in your best interest to leave it asleep. Like, let your competitors be sleepy and not notice, because you're going to win easy. The more you poke it, the more you risk losing that race. Now, you're still the fastest. You're still maybe the strongest today, but who knows? I don't know what's going to happen in 5 years. I don't know what's going to happen in 10 years. And so it's just like, why would you do things that potentially jeopardize your future negotiating position?
Yeah. Well, the other thing too, like that are factors, is Supreme Court decision on tariffs, which we keep hearing imminently, depending on how they weigh in on that could have ramifications here. And also midterm elections coming up in November, that the likely outcome is gridlock. Markets love gridlock because it gives them certainty. And I think that honestly, a lot of other countries would like to see a gridlocked President Trump, not to get into politics. So we'll have to see. But yeah, this I think is short-lived. But as far as United States dominance, anything can change. Technology is changing things very rapidly. But given the United States leadership in the space, barring some sort of unprecedented disaster, I think there's at least a few decades left.
Understood. All right, that's one question gone. I still have 36 for some weird reason. Does Buffett still own UNH? Yes.
Yeah, Pelosi does too. Pelosi did sell PayPal, by the way.
If you're not writing cash secured puts on UNH, then what stock are you more bullish on? Matthew Johnson is going to have a hard cap tonight on these questions, man.
So pretty much every name that's in my portfolio, I'm more bullish on. Like the one that's outside my portfolio that I've not owned for a while is Nebius. I'd be pretty interested in writing cash secured puts on Nebius. So honestly, like if PayPal's earnings are such where I'm like, hey, for whatever reason I'm exiting, I'll let you guys know. I'll make a video on it too. It'll look clickbaity. I don't really do clickbait. I do like the clicks, but I'll do it if it's real. But anyway, Nebius would probably be the number one target along with that little drone stock company, but I still need to do more legwork on that. Nebius, I've done the groundwork. I know it's a great company. I think the price is good right now. I don't think it's like dirt cheap, but cash secured puts easy on that. Yeah.
Yeah. Nebius can hopefully go to 6. My dude, if this happens,
I'd go in
I would
hard.
be in like a Lambo or food stamp situation. Like I'm already in margin. I would be like hella in margin.
If we saw that and macro wasn't like completely in tatters and there wasn't some massive scandal in Nebius, I would have probably immediately exit HIMS. I would cut BM&R for sure, not all of it, but trim. I'd cut a good chunk of PayPal. I'd probably sell my Tesla too. Like I would go 10% easy, and I'd have to think about going higher.
Yeah, I mean, I'm at
20. And also calls.
Dude, I would immediately cut Amazon Meta because they're piggy bank sort of positions. I would immediately cut HIMS and probably BM&R as well, and just allocate it probably all or most into Nebius and do some pretty heavy leaps positions as well. And overnight, Nebius might become a bigger position than SoFi. Probably would if I do all those actions.
Regarding cash secured puts, like I actually wrote some on SoFi today, so I'm not like, I think it's attractive. We're entering earnings, which gives a lot of volatility, a lot of premium. I think I wrote 23s. So
for SoFi,
yeah. Yeah, I'm not doing what you're doing, Tevis, where
Hey,
you're
that's
like,
kind of close to me. I have 32s.
yeah.
Just flip them.
You figure out a way to do degeneracy on cash liquid puts, man.
I don't know what to tell you, man. Like, I think I need SoFi to do well, because I have 30s for Feb 13th. I have 32s for Feb 20th, and that's it on SoFi. And I have 15 contracts of 32s at Feb 20th. So
Yeah.
let's do
I
it.
don't have many, but I had a little bit of extra money where I'm like, I'll do some puts. And I didn't actually sell any calls at all. I looked at the premium, I looked at what I'm expecting in earnings. I'm like, okay, it does not make any kind of sense to write cash liquid puts for like a couple of, or not cash liquid puts, covered calls for a couple of dollars and potentially get blown out of the water. No guarantees what the stock price does, but man, I think there's upside risk.
Let's move on.
Yeah.
So that answers that question. What are both your thoughts on Zeta? I've pulled a Roy and started a small position, invest and investigate. You can start on this one.
Yeah. So not original with me. Drunken Miller, had coined that. I think Soros maybe initially started that, but there's many other famous investors. But yeah, that works incredibly well, I think, in most markets, especially a bull market. Zeta myself, I don't have any kind of position at all, not even an investigatory one. I'm not convinced on the deepness of the moat of that data that they have, that the data pairing specifically and the proprietary data. The little bit that I've dug into, I'm like, okay, maybe there's something more here than I expected. Fundamentals and like the actual business, really good leadership, really good numbers. I think it's a good investment. I just don't know if it's a great one, and I tend to not invest in good ones.
Yeah, I would say similar here. I heard the case from Nick. It's interesting. I think I would fully need to wrap my head around it, and I'm not there yet. But at the same time, like, I don't think it got me that excited, as in terms of what they do. And the ironic part is, when Elijah told me about Zeta back in like July or June, and it was at $14, I think, $13, something like that. Same thing. Like, I looked at the deck, I started asking the questions, and I was like, not really interested. And then I did a 2x from there, and now people are saying it again. And I'm like, But at the end of the day, like, you're the one that's going to allocate your funds. You're the one that's going to hold this thing. And if you don't feel like as bullish on the prospects, or you'd rather own something else, then like that's a decision you got to make for yourself, because there's a lot of opportunities in the market, as we've seen, right? So,
yeah.
HIMS under 30, how much lower you think it can go to zero? Say,
I mean, like, it's not going to zero. I'd have a hard time seeing it go below 20 unless there's like a Liberation Day type of, or yen carry trade type of event.
Yeah, really, it's make or break for this earnings. If this earnings doesn't go well, then I think we're looking at the mid to low 20s. If this earnings goes well, then I think we should be back into the 40s potentially on HIMS. But yeah, it really depends. It's been just straight downfall, man. This thing looks ugly.
Yeah, I'm glad I took profits up much higher, and I think my cost average is still below, but not by much.
Dude, it's crazy. Like, I bought 2027 leaps, and those did really well. I mean, about those. We talked about them. And I closed the last of my leaps right before the last earnings. And I think the stock was like, I can't remember, but like the stock was in the low 50s, I believe, or the high 40s, something like that. And I was like, oh man, I should have closed them at 55. I closed a little bit at 55, and I didn't close them all. But now, if I go back, those 2027 leaps that I had, like, those are cheaper than what I bought them at the beginning of this year. It's insane. Did a full round trip. Like, the leaps did a 3x ish, and now they're lower than what I bought them in the beginning of 2025. So I might honestly re-enter them again, but I would need to see the earnings.
Yeah, like HIMS, like, I'm not looking at the numbers themselves too much, but there's some specific yellow flags that I'll have my eyes on. I actually need to do an earnings preview on them, but I've been saying this for a while. They're a second half of this year play, I think. So we'll see.
Potentially. How do you feel about new?
All-time highs, man.
Is it actually?
The beautiful thing is, I made a little post on this. David Velez is an incredible CEO, and he's built just a cadre of talent there. And that's why leadership is so important, is when it's just easy to say, okay, these guys execute at a high level, no matter what the macro is doing. The stock might be beaten up, but the company is just fine. And that was the case a year ago. Brazilian real tanked. Brazil had a lot of issues. There's a few other things with Nubank as they're entering in Mexico and Colombia in earnest. They started their deposits, local deposits, a little bit early too. All intentional, all according to plan. But it's a fundamentally ridiculously strong company, trading at all-time highs, I think, for a good reason. And it's one where, like, I have a number of spreads, actually a pretty large number of my Nubank position is now spreads, vertical spreads, and also just naked calls. Also a number of shares too. I don't ever plan to sell the shares. What I have to do between now and next January is figure out, and there's a long time left, so I'm not looking to do this right now, but how many of those calls do I want to convert over to shares, or do I just take the profit and keep the shares and move on? Don't know. High quality company though. I want it to be my portfolio for a long time.
That makes sense. Have you looked into Visa or MasterCard on their dips?
Yeah, those are fun because people don't understand, especially Visa, but also MasterCard.
The credit card gap.
Yeah, they think it's just a credit card company. It's like they're a platform. They're not being disrupted by the credit card cap. And then before that, when Circle debuted and it was kicking off the year of the stable coin, Visa and MasterCard got hit pretty hard. And I'm like, is the market not paying attention at all to what these guys are doing with stable coins as well? Because I know I talk about it plenty with PayPal, but like I even know what's going on with these and I don't invest. So really good, really strong companies that, like, if you know them well, if you study them well and you get a dip, you're like, this doesn't affect them at all. That's alpha. And I think that's what's going on here. But again, I think probably good opportunities, maybe not great ones. And so I'll look elsewhere.
Yeah, that makes sense. Sorry, I was just looking at the US dollar falling, and there's a question about that later on, so we'll talk about that. Anyone buying SoFi calls June 2026 when SoFi dips closer to $25? Honestly, it's if they sell off on earnings, I would definitely go in heavier. I sold all of my June 2026s and July and January 2027s back in the summer, which it just purely turned out to be luck for me. When we were at $28, $29 ish, like I sold them. Mostly because I knew I also had January 2026s that were going to expire. And I was like, do I want to take assignment or do I want to just, tank or take the shares? And so I just sold them. But again, if it falls, have dry powder on the side, guys, because the leaps could get really interesting.
Yeah. No, I thought about it briefly and I wrote the puts instead. At 22, everything is the same for SoFi. Like right now, I would have no problem doing it. Into earnings, I expect that the stock price will probably go the other direction, and that's fine. I already have a bunch of $10 calls on it. So, but I that's a really good question because I'm going to have to keep that in mind with SoFi because I keep seeing it fall and I'm like, dude, this is silly. There's some reason for it. It's some of it sector related, but yes. Well, okay, but June 2026, for me anyway, I would do it a year plus out.
Yeah, it's pretty short. Especially because like this thing has been kind of flat to down for 3 months, and so you have all of that time shutting off. And if you're buying the calls, it's just way cheaper to do it essentially because there's been no volatility for quite a while now.
Yeah.
Roy, what do you think on like the chances of SpaceX going public? This is really happening. I don't know. I don't feel it that way.
I think it's like 99% happening.
Yo,
maybe not this year, but yes, I think that they'll go public. Well, one way or another, they could do it through. They're not going to do it through its SPAC. I don't think merger with Tesla. There's a lot of different ways. Probably not DPO either. But what's been happening in the private capital markets is outside of a few names at the top, including OpenAI, Anthropic, and also SpaceX, they've been in a bit of a tough spot where a lot of the others just can't get the capital that they need. Now, some do and some don't. And that's normal. But if you look at it, and we looked at this like 3 or 4 months ago, Tevis, if you recall, where the capital just wasn't there.
Yeah.
The amount that OpenAI is demanding, I think, will continue to siphon that out. SpaceX is probably the number 2 right there, and Anthropic also with that. So I think it's highly likely because what it does is it gives a company like this immediate access to shareholder equity. There's other routes to that as well. They could like look to tokenize their private equity, but I think that would be more of a stopgap of, hey, we're going to go public. Let's do this 6 months early. I think it's highly likely, but maybe not this year.
Yeah, that makes sense. Very much doubt Tesla will go into the 300s. All depends what Elon says on robotaxi expansion and robots. Elon bought $1 billion on shares from 330, 385. Why will shares fall below his buy point?
Because of Elon.
He doesn't control the stock, Natalia. Like it can fall to $100 and he'll just end up buying more like the rest of us. But yeah.
In short term, like this very much trades on a narrative. So if that narrative weakens, starts heading the other way, we've seen 3 times over the last 3 years the stock just sell off.
Yeah, I think it can go into the 300s. Keep in mind, it's like 430 right now. It's $30 away. It's less than 10% away from the 300s, technically speaking, right? So it definitely can happen like tomorrow. I'm not saying it's going to go to 300, but with a 3 handle, I think it's very realistic.
Yeah, I'm eyeing like 285, and I'm like, I think it's very unlikely it goes down that far. But if it does, oh yeah,
yeah. Do you guys think the government will shut down again on Saturday?
I don't know. It keeps flipping back and forth. Where in one moment it's like, oh, it looks like it's not going to, and then it does. If you look at predictions, market actually, let me do that because I've not done that today. Shut down. Okay. Sharing now. What a time that we live in where we can just.
Yeah.
Okay. 75% chance now. Well, this was after it passed through the Senate. And then we got a little bit more news as well. So
yeah, there's like
a decent chance related to ICE. Exactly. We'll have to see. Now, I'm kind of curious how the markets will react. Something that's this high of a chance, I tend to think is priced in. And usually the way that these shutdowns go, at least initially, the market really doesn't care at all. The problem is if this shutdown lasts, 20, 30, 40, 50 days, and you start seeing like airspace being closed because there's not enough, it's a mess. So hopefully not, but we'll see. What do you think?
I think everything is so freaking politicized and it's just disgusting. So yeah, I wouldn't be surprised if we get shut down. You shared your take on crypto regulation, BMNR. What is your take on that matter with SOFI? Crypto regulation. Look, I think we're going to get some clarity, hopefully, this week around the market structure bill and whether that passes and in what form that passes. Obviously, that has implications on stablecoin rewards. And as we know, SOFI has a stablecoin. So it's going to affect SOFI as it's going to affect, obviously, traditional financial institutions indirectly, and it's going to affect all the crypto companies. It really depends on that bill for both BMNR as well as for SOFI, but more indirectly for SOFI. But I think SOFI will definitely catch a bit on that narrative as well.
Yeah.
So I think that's on Thursday, Rodrigo, that's supposed to get voted on. What did prediction markets say about that passing, Roy? Maybe we can throw that up as well.
Clarity Act. Let's see. All right. Well, it's actually higher than I thought, but it was at one point 80% here. So it's now above a coin flip at 56%, 55%. So, um, there's been some pushback from Brian Armstrong, most notably, but a few others as well. Brian Armstrong, the CEO of Coinbase. We will have to see. And I think that honestly, crypto needs it, and maybe that's one of the reasons why it's just been in the doldrums since October. And like you said, a lot of companies are impacted by this.
Yeah. Who's going to win the Super Bowl? Honestly, I think the favorite is the Seahawks, but I'm probably going to end up putting money on the Patriots.
So I'm a Titans fan, sadly. But the nice thing is I don't have very much time to follow football other than a few games here and there. So it's been miserable. They fired Mike Vrabel. He's the coach for the Patriots. I mean, it was a huge mistake. I knew it at the time. I didn't know that necessarily he was going to take the Titans to the promised land. They have other issues, but I kind of, even though most Titans fans would say the opposite, I want Vrabel to win. I think he's a great coach and great guy. Go Patriots.
Yeah, I just threw up a poll, so people can now vote on that if they want to. Sorry for a boring market question, but I need your thoughts on UNH. I'm a holder currently down 30%. Plan is to hold long term, but is my money better elsewhere now with government? Like, I think that's a decision you make for yourself. I mean, we talked about UNH at the beginning of the show, and our thoughts on it. I don't think either of us have a real interest to be in UNH over the long term, but I would say revisit your thesis of why you became a holder in the first place, and then look at it in the context of this earnings and determine what your risk is that you want to expose yourself to that position. If you have 10% of your portfolio and that's what you felt comfortable with, and now after this earnings, you feel less comfortable, then allocate accordingly, or more comfortable, then buy more. But ultimately, do I think UNH is going to go to zero? No, I think it's going to be fine. Realistically, it's all a matter of what you see as what opportunities you're confident in.
Yeah. And beyond what you said there, Tevis, I'll just add two things. So one is if you have a higher conviction elsewhere. Now, I personally think it makes sense to usually rotate towards highest convictions. Keep in mind your goals, your strategy, tax ramifications as well. But for me, I was investing in ChargePoint back in 2023. Oh man, they've done reverse splits too. So I don't even know where we were at, but I basically was down almost half for my initial investment. Thankfully, it wasn't large, but I ended up selling sometime in 2022. I think maybe it was late 2021. It was when Ford basically announced that they're going after the NACS standard instead of what they were using previously, which really good for Tesla, but really bad for ChargePoint. I was like, okay, since Ford did it and several others had before, writing is on the wall. I got out. Yep. And I don't know exactly, again, when I exited. Let's just say I exited down here. I would still be down 97%. So an easy mistake would be oh, well, the thesis has changed, but this will rebound. Let me break even first. And then you end up losing 97%. So if the thesis is broken for you, get out, figure out an exit. If you have a much higher conviction in something else, usually makes sense to rotate.
Yes, agree. Will Tevis become a U.S. citizen in 2027? Probably not, unless I get a wild marriage request. But it's unlikely, unfortunately. And ask your boy to ease up. Honestly, I've said this before, and I will continue to say it. I think, Trump talks a big game with regards to Canada. I think if he wanted to, he could incapacitate Canada overnight. And here's exactly how. He can say 1-to-1 passport swap for these people who are the top talented people. And he would steal a huge chunk of them overnight.
Yeah.
And all the people that are left are people either that are not good enough, or B, that are politically aligned with, the government landscape, let's say here. And as a result, I think you would see a real. It's like 22% of Canada is public sector, and it's like 4 out of every 10 of new people that are being hired are public sector, because private sector is completely displaced elsewhere. And so as a result of that, it's just the burden to keep the public sector well funded is larger and larger and larger. Taxes are only going to go up, they're not going to go down. And regulation is only going to go up. I think it's going to go very much in the direction of Europe. And so again, if Trump wants to take over, he doesn't need to do anything aggressive. He doesn't need to, have any strong stance. He just says, "Hey guys, 1-to-1 passport swap. This is what I'm looking for, and watch what happens overnight." That's just my thoughts.
Only thing I have to add on there is, who is John Galt? If you know, you know.
It's the History Channel.
Atlas Shrugged.
Yeah. Oh, got it.
Your rant reminded me exactly of that. By the way, if you ever do read that book, abridged version, if there is one.
Yeah, that book.
Don't make the mistake that I made.
That book. Kelly, you're Canadian. All right, get out of here. What state would he move to?
Texas.
I mean, I'll give you a hint. It includes cowboy boots and a hat.
Yeah, be my next door neighbor, man. Or we'll rent a room out. You'll rent a room out to us because you're the billionaire. So
I don't know about that. Well, if it's like a 1-to-1 asset swap as well, if my dollars are now US dollars, then sure.
Man.
Do you think Meta will miss? I think it's all going to be dependent on the commentary from Zuck.
Yeah, CapEx. Yeah, that matters more than the numbers. It does.
Yeah, exactly. I think the numbers are going to be great. I think it's all going to be around what is Zuck spending, where's his head at. So the call is going to be very important for Meta. What are you expecting as SoFi price action on Friday? Roy's at $33. Go ahead.
31.
31?
Yeah, 31 was my real, but yeah. We'll see. So 31 if they put the numbers that I'm expecting, which is growth above 50% revenue. It sounds crazy, but weaker comp. They're helped by a one-time item on the tech platform. And I think they're just going for it with the lending.
Yeah. Price action. Yeah, I don't know, man. It depends on what it closes at what it closes at on Thursday. Again, I think it could be trading above 28, 29 for sure. Cowboy Tevis coming to text. Look, I think if we do Friday Fiesta with Ron and Travis, I'm going to have Gemini whip up both of us in cowboy hats and a whole attire, maybe sombreros for one of us, but we'll see. It's going to be a fun show.
That's right.
Yeah, 31, but then dilute right after.
Oh man, I would be so mad.
Yeah. All right. Let's see. What do you think? Up or down? Up.
Yeah.
What are your thoughts on the US dollar weakening? Yeah. So Roy, your boy said US dollar was fine, but it's not fine. And what are your thoughts on this?
I mean, it is still fine. It's not as weak. Like the thing is, we need to zoom out. Back here, this is weak. This is like the DXY. It's basically the United States currency against a basket of stocks. And so, if you're trading here at this, it implies basically relative to where the United States dollar had been, it's trading 70 cents to what it used to be at a 1-for-1 basis. So parity is 100, and they're just below parity. Let's zoom in a little bit more over the last 6 months. It has fallen off a cliff. A lot of it has been related to actions that the United States government has taken. Honestly, though, this is a fantastic thing for most people that are shareholders. It's just really a bad thing if you plan to do traveling internationally outside of certain locations. Your dollar just doesn't go as far. So why is this a good thing? It's because we are net importers. We import a ton. A weak dollar means that our exports, which usually, sometimes they do well in tech, they particularly do, but they actually do much better because relative to what things used to cost, they suddenly seem like they cost less because the dollar has fallen. And so usually this helps supercharge the economy. Now, you don't want to see this go down on a straight line. And honestly, this is a really steep reduction. So it is something to keep an eye on. But yeah, this is bullish. It's also very bullish on companies that are reporting. Now, this is relatively new. Let's just do year to date. So most of this benefit won't be realized really, and we'll have to see how. But over the last 3 months, you can see we were at parity or below for much of it, which means earnings will be higher for companies than perhaps expected that are doing a lot of international sales. So this isn't a massive thing for PayPal, just going back to them because they report on earnings and they report on dollar neutral earnings. But for the longest time, if we look at over the last 5 years, like when the dollar is doing this, this is terrible for investors and it's terrible for companies in the United States that are looking to do business overseas versus parity and even below is just so nice. And so, yeah, it's bullish as long as it doesn't like crash into the 70s and 80s, in which case it's not great. By the way, one last thing on this. This isn't the reason why it's happening, but when you see currencies in other countries fall like this, oftentimes you'll hear outcries of currency manipulation. And the reason why is governments know like weak currency automatically means they do so much better at export markets, which is great for their economy. There are some other considerations too. So, yeah.
I don't know what. So I think Roy answered the what drives a decrease. I don't know if I agree with this comment. I think it's good if you're a foreign investor because, like,
Really good.
for me, for example, if I want to put net new funds into the account, I would rather do it right now versus before, right? Because I get a bigger bang for my buck. Number one. Number two, might be a good time to let you guys know I'm going to be in New York City this weekend, and I will take the currency conversion where it's at right now because again, I get a better bang for my buck converting from Canadian dollars into US dollars. And so I think it's great from that perspective as well.
Yeah. I can't find the chart, but there was a figure that was looking at the earnings growth or the growth in stocks over the last 2 years. And for the United States, like 2 years ago, some of it was multiple expansion, but a lot of it this last year was driven by real revenue growth versus internationally, a good chunk of that growth was not from revenue acceleration, but from multiple expansion and currency gains. So, like, honestly, this is a good thing for international investors too. Mostly. There are some other considerations. It depends what you're invested in.
Yes, exactly. Are you giving odds on SOFI blowout? I mean, depends on what you define as a blowout, but I think I would put very high odds on it.
I think he means my earnings predictions. But
Am I
let's say
giving
50% revenue plus. Where did you come in with your revised numbers, Thomas? Were you at
I think
50%?
when you account for Chime, I'm at 50% too. I think 50%.
Yeah, that's a blowout. I think pretty good.
Yeah, I would definitely take those odds. I wouldn't say it's over 50% that they like blow out to that degree, but it's I think people are going to be surprised.
Yeah.
Will SoFi hold up or fold like last quarter? I mean, TBD, man. I think the thing is, it's on a Friday this time around, so that gives the market a breather to digest the numbers before it opens on Monday. There's also macro implications, so that could be something that FOMC shutdown, whatever. Yeah,
the shutdown is my concern. Usually shutdown, no big deal, but because last time was as long as it was, it might be a big deal. We'll have to see. So if macro is stable, they're not. I think very low odds that they dilute this quarter. I think they'll just let it run, and it's going to do really well.
Yeah. Let's see. People are concerned about me being held up at the border entering the States. And I'm going to be like, yeah. How many downgrades are coming after SoFi? Honestly, I don't think that many. Yeah.
Zero.
I'm going to see upgrades.
even the most bearish people, they don't want to be so ridiculously offsides that they'll raise their price targets, even if it's still a sell.
Is it true? Tefis doesn't have a TV. Yeah, so I think Tanner's been spreading some rumors on his show, and this is in fact true. I do not own
Nice.
a TV.
Nice dog.
I have like 5 screens in front of me right now, but no TV. Yeah, so I don't need one. I feel like, so my living room, I've made it so that it's I would get distracted if I had a TV in my living room, and when I invite people over, like I want to have a conversation, and I feel as though it's a little bit counterintuitive. If I want to watch a movie or whatever, like I have screens. I have screens in my office. Yeah. Thank you. All right. Oh, that's the same question.
Yeah, I think we did that one already.
When do you think crypto sentiment will recover? What are your thoughts on? So we answered the dollar part. The sentiment on crypto, I think, is going to be largely tied to a catalyst, and I think the biggest catalyst is, of course, the bill that's going to be passing this week. Hopefully, passing this week.
Yeah. Yeah, Tom Lee thinks silver and gold are pulling away. And I think there's a little bit of truth to that, but I don't really buy that thesis.
Yeah. What kind of a swing do we expect on Friday on both sides?
Yeah, I mean, like, I think 31 is not wild to think.
Like, what's the percentage swing plus minus? Like what's the range? I would say like plus 15, minus 10.
Yeah, I think you go $5 either direction.
Yeah,
but this is with macro factored in.
Yeah, I don't know what the implied volatility is actually.
Lower than it should be.
Is
it's
it?
why it's why I was happy to write more aggressive cash seeker puts, but I wouldn't write calls. Usually I do into earnings. This is one where I'm like, too much upside risk. The premiums just are not there.
Yeah, understood. I do think it is double-digit swing, but we'll see. I see a lot of people saying single-digit swing, but you got to keep in mind, guys, a single-digit swing is under $3 move for SoFi on earnings. So, do you think they'll adjust their PSUs to have more time? So the thing is, if they adjust their PSUs, they have to do another vote. So I think the easiest solution, especially because this round of PSUs has already been like absorbed in their financials as a result of how they do their accounting, and their best bet is just to try to hit them as much as possible. Now in June, there could be another vote for future PSUs, but adjusting their PSUs to have more time, I think, is going to be it's easier said than done. So
yeah, that's not happening.
It's not happening.
That'd be a fun topic. Maybe another time on like, what do we think that those PSU targets would be 5 years out? That'll be fun.
We could do that. Yeah.
I need to put a little more thought into it. I have initial thoughts, but
yeah. Okay. Let's see. The chat is wild. People giving me shit about the TV thing. I don't know, man. It's definitely a lifestyle choice, that's for sure. What other calls besides SoFi when it IPO'd had Tanner made? I don't know.
I don't think he does IPOs often, so yeah, that might be the only one. Usually IPOs are well, this is one of the topics we didn't get to tonight, but you can look at last week, or like even this week. Circle has just fallen off a cliff. Figma, we talked about that a week or two ago, continues to sell off. VG, which I'm in now, it went public basically a year ago, sold off immensely. Now, some like Figure did quite well, but it's a rare exception, and it's usually an incredible company or just something that was severely mispriced to do that.
This is the Bootleg Weekly, guys. I don't even know a Tanner. No,
Yeah.
but I think Tanner, the professional juggler in Canada. I don't know if you saw that, but Tanner's doppelganger. Anyways, yeah, I think IPOs are a very enter at your own risk type of play. So you guys have to keep that in mind. I don't generally like to do IPOs. Figma is something that I'm interested in right now, potentially. But yeah, I definitely didn't want to buy it on IPO day because it went like significantly higher. I think it went 140 and it's like $30 right now. So be aware. Any idea why they moved earnings to Friday? I mean, we don't know. It could be something as big as an acquisition or as small as a scheduling conflict. Who knows?
Usually it's the latter, but like Teva said, when earnings is moved up, sometimes it's because they have significant material news to announce. Since it's on a Friday, companies don't really report on Friday. I think it's almost certainly just scheduling conflict.
Yeah, or I mean, one interesting theory I saw online is some behind the scenes stuff with regards to how options work because SoFi is manipulated. I don't know if they're thinking about it like that concretely, but that could also be something.
Yeah.
Yeah, and like, look, Kelly, even with Robinhood, I mean, this thing did sell down if you had bought an IPO, right? Like, if you look at Robinhood's IPO, it went as high as $85. Like, it opened up in the 30s. Here, I'll show you guys. This is what I mean about investing in IPOs, right? Like, okay, take a look at Robinhood here. $33 and went as high as $85. And then look what happened. Right? And went as low as $6 a share. And you were waiting for years for this thing.
Did it get to 6?
Yeah, $6.81.
Oh man, I missed that. That was a little earlier than that. Yeah.
June of 2022, right? So, and look, it was in $7 in November of 23. And now it's of course $105 after peaking at 150. So great company, great execution, but if you buy at IPO, you have a lot of hype. And that's all I'm saying. And if you look at our boy Figma, it looks like a very similar chart. All right. Let's see. What do we have here? Yeah, futures are green. Qs are up 0.5% after hours. Let's see if it holds.
Earnings season, man. I love it.
Definitely positive. I think I love the stock market for the same reason I love sports. It's just like so exciting. And maybe I'm just a nerd for saying that, but
I used to not think that. And then, when I started doing individual investing, I'm like, okay, this is actually fascinating.
Yeah. Webull, Circle, Figma, IPOs. Exactly.
Yeah.
Just be careful about IPOs. Okay. Let's say for the third time they do this, what would they use this money for? Oh, the dilution.
If they did one now, it would be for an acquisition. It'll take them a while to churn through the cash and get anywhere close to being capital constrained for lending, even with the numbers that I am expecting for personal lines. No, I've only ridden a few times, but no, I have a Tesla instead. No worse.
I think he was expecting you to say nay, but
nay. Oh man.
Next time.
You got it. Yeah.
How do you watch sports on your phone? I have screens, guys. I don't have a TV. It's fine.
It's not like some troglodyte or something.
Yeah, I would agree with this. An acquisition is probably the play if they do it again. Do you guys like Zeta? We answered that question before. Catherine with a question. When do you think silver is going to top? Can that be my question, please? Do you think it'll just keep going up. I think it might have popped already.
Yeah. Nothing keeps going up. It can go up more. And there are secular forces out there, including what's happening in AI, solar to a lesser extent, and treasuries as a lot of banks move away from United States dollar and dump that in exchange for other mediums, including silver. So I don't think it's going to collapse and go anywhere where it was before. At some point, this thing will topple over. Myself, I'm just watching it on the sidelines. I do own some physical silver. I sold a lot of it, in the 30s, honestly. After I'd held it from, I think, was it 2013? So that was a hedge, not an investment. And so you have to know why you're in it. We used some of the money to buy a Tesla, which was nice. So, but yeah, things like this, when they just are relentlessly like, and I'm not going to even put up a chart, but it looks just stupid what's happening. It can do that for a while. Silver is not supposed to be trading at like 8 or 9% up or down in a day. It just doesn't. So this price action is not sustainable. The demand really is, though. So I see a lot of people that are speculating on it, like to the upside, and also a lot of people shorting it. I just think that's really dangerous. So I'll stay away.
Yep. Great. Next question. Gracias. Palantir opinion going into earnings. That is for Roy. That is not for Tevis.
Wonder why. Yeah. No, I really like it. I think that it's going to be really, really explosive. There's an analyst a few weeks ago that talked about the potential impact of Palantir delivering 70 to 80% revenue growth this year. Not in a single quarter, but this year. I think that analysts' expectations are actually soft on Palantir. I think I haven't done the numbers yet, but I need to soon. I've done some preliminary stuff. It wouldn't surprise me to see 60% plus growth this quarter and some acceleration as well. There's a lot of stuff like I just did a video on this actually that came out today. I recorded it the other night on Palantir and how they've grown from just a small contract with Hyundai Heavy, which is the largest shipbuilder in the world, and I believe like the 9th or 10th largest company in South Korea, to like just one little part of that conglomerate to entirely over their ecosystem. And so that generates net dollar retention, helps them get those high revenue growth numbers, sticky product, and just incredible company. So I don't think it's going to go up like 10 or 20 or 30% on earnings, but we might see a nice little bump. It's very expensive still.
Yep. Is when is PayPal likely to get delisted? When they go private, Steve.
Yeah, if they go private or get bought out, those can happen.
How about Air, though, Roy? You're killing it with that one. I think it was down the other day.
Yeah, it's down, so the thesis is over and it's broken because stocks
Roy's
only
losing money.
So no, it's Air. I mentioned from the very beginning of the year, it's more of a second half play. Although year to date we're up 25%, so not bad. I do your due diligence, and I mentioned to people like when it ran into 30s, like, oh no, I missed it. I was like, no, this is very volatile, high beta stock. It will probably give some more opportunities between now and the end of May. But do due diligence, make sure it's a good fit for you. It's not a position for everybody because it's so volatile. But Mr. Degenerate over here, he likes Air and he's been buying it up hand over fist. So
I'm mostly buying calls, honestly.
Yeah, I'm 100% shares, no calls at all. I
bought September calls, September $40 calls.
Oh man, aggressive. So
really relying on you, bud.
Did you see my price target for the end of the year with Air?
Yeah, it's like a 3 to 5x.
Well, 70. So yeah, 3x essentially.
Yeah.
And it's not
reported sold all of my Air.
Nice. Yeah, but seriously, do due diligence. Don't just rely on me. There are things that I miss. There's things like PayPal that I get wrong. So yeah. Opposite of that. Can you imagine like going full port with size on a position that has under $1 billion market cap? It's like, okay. No. But the fun thing is that, like high beta stocks like this that can be explosive, just a little bit. Now, I've done more than a little bit. It is over 10% of my portfolio, but just a little bit won't kill you if it goes down. Make sure it's worth the risk though, because if you do a bunch of them, that's bad. But then if it goes up like a 10x or higher, it can make a meaningful impact in your portfolio. So Air will never go to Air's been around longer than PayPal. It's a company older than I am.
I don't know how you find these companies, man. Just like cockroaches, just 30-year-old companies that just somehow are still around, just chugging away, 5% growth, 6% growth. Not Air, I mean PayPal.
Yeah.
But, yeah. What else did I want to throw up here? Oh, Nebius is getting ready for a new all-time high by mid-February. Congrats to CoreWeave and Iron holders because of the CoreWeave NVIDIA deal. Roy needs to get on the Nebius train because it is leaving the station. You hear me?
You just wait until after Tuesday so I can figure out what I'm doing with PayPal.
That's fair. But I will hold you to that, Ronald. On Tuesday, if you're not in Nebius Wednesday morning, me and you have a chat. All right?
All right, Tommy.
Is him still around? Yeah, they are still around.
They exist.
You guys, yeah, this is Roy Ragebait 101.
Yeah. Yeah. It feels like this is Ragebait too. I literally sent Tevis a DM today on Cloudflare. I'm like, man, it's so frustrating. I had a post on this as well. It's been on the radar for a while. It is always expensive. It might always be expensive. They're positioned incredibly well. Love the CEO too. So did not get in there. It has been on that list of stocks that I have. There's like 5 or 6 that I've done the DD. And if the price ever gets to where I'd like it to have, I will have a position instantly. I don't need to do any more DD. Cloudflare is one of them.
When does HIMS get delisted? Oh my God, stop. What is your drone stock, Roy? So maybe don't answer that. When are you gonna let us know what your drone stock is?
Yeah, so it's a very tiny company, and it's an invest and investigate position. I only own 100 shares, which, I mean, you can look at all the drone stocks out there, and I've mentioned on a couple that are not the one. It's one that's lesser known. I need to do some more due diligence on it, and I really don't have time over this next week, especially with everything that's happening in earnings. So probably like 2 to 3 weeks out, I'll know enough. Right now, it's kind of a mixed opinion. Some of the things that I'd heard about the company and I initially saw, I'm like, oh man, it's even better than I thought. And there's been one thing where I'm like, I'm not sure that this is nearly as good as I thought. So I'm of the opinion right now it's probably a decent swing, but I need more time.
Yes, agreed. Okay, let's go on to the next question. Given the devaluation, are you seeking to buy more stocks deriving income from outside of the US? That's an interesting question. I don't think the devaluation is going to stay devalued for too much longer, though.
Yeah, I mean, it might be for a little while, but no, I mean, like I'm already kind of positioned that way anyway. So,
Tanner said he was going to do a meetup in Toronto. Yeah, if there is a meetup in Toronto, let me know if there would be interest in that. Actually, let me throw up a poll and let me ask you guys. Start a poll. Are you from Toronto? Yes. No. No, but I travel there for a meetup. I'm really curious. So just let me know, guys, if you can answer that poll. And maybe I can also...
I'd be interested in going too, if it worked for the schedule.
Also, here's some memberships for you guys. Cool. Okay. Pinterest keeps trading cheaper and cheaper. I like it as a long-term play and potentially even a buyout candidate. Any thoughts on Pinterest? Yeah, I mean, there was word that OpenAI was going to buy them, wasn't there?
Yeah. Also rumors that PayPal would buy them.
Yeah,
they've tongue in cheek, but
true.
They've been a buyout candidate for a while. There is value there. If I had to pick a social media play, it wouldn't be this, but it's a lot better than Snapchat.
Yeah, honestly, man, like I was in Pinterest for a while. That was actually one of the IPOs that I bought in shortly after. I think it was back in 2021 they IPO'd. Um, really a big fan of the stock. I don't really use the platform at all. I just like the stock because of the visual search engine type of value proposition, and I think now with AI, that's going to become even more valuable for some of these companies. So I do see it as a buyout target. I'm not sure, um, you know, who would buy it. I'm not sure what is if I would ever get back into Pinterest, but yeah, eventually I got out of Pinterest because the growth was just it was sustainable, but it was definitely not as exciting as some other opportunities.
Good job.
Yeah, so we'll see. Next question. We answered that. Next question. Is writing $20 cash secured puts on BMNR a good play for the next 6 months? Not financial advice. Would I do that? Probably. That sounds like something I would do. It's a little bit vanilla for my portfolio personally. I'd probably do like 30s or something. But yeah, I think 20s for 6 months out is fairly safe. I don't know, Roy. What do you think?
I think you do 70s. Full degen. I mean, like that's more my speed. Like if I didn't have the BMR position that I wanted, I wouldn't do 6 months. I prefer a little bit tighter gap when I'm writing puts. But yeah, the wild card, of course, is if we enter full bore crypto winter. Could that happen? It can.
Well, I mean, there was another question here, and maybe I'll here. What is your ETH projection in 2026? ETH is currently 3,000. I think by the end of 2026, it's trading closer to maybe 8,000 or so. I'm sure I would welcome it to be higher than that. I would say, over 6,000, it's definitely like I'll be happy with it. But I think 8,000 ish could potentially come with what we're seeing. And the reason why I say that very quickly is we're seeing the supply shock. Like supply is the lowest it's been in the last 11 years or something like this. And we're seeing that not only is it so low, but it's also, we're getting a lot more Ethereum every single week getting purchased by DATs and getting locked up through staking than we are Ethereum on the market. So at some point or another, like something has to give, right?
Yeah, this blue line here is the supply on like every exchange that's out there. Now, a little bit of a chart crime because this is not zero. This is 16.5 million. But you can see where the digital asset treasuries, specifically BMNR, came online. But even before then, like the trend was pretty clear. Institutional adoption will drive this further. Clarity Act will help as well. This is not setting up, by the way, like a massive squeeze like what's been happening on silver, at least not in the next couple of years. But yeah, I agree with you, Tavis. I think that there's a lot of catalysts as long as we don't enter a crypto winter and we do get that regulatory clarity. Institutions like look at Davos and all the things that they said about crypto, stable coins, and Ethereum. It was one of the central themes of the conference.
Yeah, absolutely. Igor, I will hold you to this, but if ETH goes to 8K, then I think we BMNR shareholders are going to be very happy because BMNR is going to be higher, and so we'll
at
see.
least $30. Yeah,
at least $30. Hopefully. Teaching question 1: are you worried about the 24/7 markets becoming a thing? They even have options expiring Mondays and Wednesdays now. This just got recently approved, Roy. Are you worried about your mental health? I know I am, Catherine says.
So on index funds, they've already had daily expirations, but this is for some of the hyperscalers and more liquid names that are in the market. I think that it's amazing for brokerages like Robinhood. Yay. It's just like the trends all point to Robinhood doing very well over the next 5 to 10 years. But the only concern that I really have is for newer investors and people that don't know what they're doing. Lower liquidity. This does interject more liquidity overall, but lower at individual things because it's not all concentrated on quarterlies like it used to be or weeklies. Now it's on dailies. 24/7 trading also will introduce some very low liquid environments where some people that don't know how to handle their emotion, they get wrecked. So I fear for individual investors. I may, if I have time post dissertation, just do some very low viewership videos that even if they help just a couple of people, that good enough. But most people I think are watching this, you've been in the markets at least long enough and through a very bumpy last year, ups and downs, that you can handle your emotion, hopefully. But yeah.
Thank you. Express Bullish says, here you go, Roy. I like your SoFi prediction. Hope you're right. I'm all in.
Oh, thank you, man. I really appreciate that. I hope I'm right too. When your second largest position it goes up, it's a really good thing.
Gifted 20 New Zealand dollars, which are worth more than they were 2 weeks ago due to the
weak dollar. Yeah,
exactly. Weak dollar, baby.
And they're not Canadian. Woo!
Come to Switzerland. I would absolutely come to Switzerland. I would be more than happy to come and be a brokey in Switzerland because all you guys are freaking rich. Yeah. Okay. Let's see. Next question is, to what price point are you loading up on Meta as it goes up? I think I would feel totally fine loading up on Meta up until like 700, even maybe a little bit higher than that, like 720. It depends on how much I want to hold. I'm not really actively like buying Meta because I want to see if it's going to go down after earnings, because I would much rather, like, I would buy it up to 700, but I would much rather buy it at like 590 or 600, right? And so I really want to see what happens on earnings, and I mostly just want to see where Zuck's head is at. And if I end up buying, 5% more expensive or 10% more expensive because Zuck is focused on the right things, I will eat that because Meta will go straight to 1,000 over the next 6 months to 12 months. And so in that context, me buying at, 730, 740 is not that big of a deal. But from a risk adjusted basis, if in fact it does start dipping into the 500 range, or if it breaks that support, or even if it tests that support at 600 again, like I think I have good odds to just wait out on earnings, because Meta is not one of those stocks where like I'll buy one share at a time because I want to also run the wheel on it. And so I would probably just enter through cash secured puts. So that's my rationale for holding off on Meta right now. And I think it's going to be really interesting to see what it does tomorrow, because like I said before, it's going to be all on the commentary and all on sort of the guidance where it trades.
Yeah, I don't think I could ever be a buyer, but it is attractive.
Yeah, that's the ethical sort of points.
Yeah, I mean, like, honestly, like, I'll be so mad if it falls to like, just right now I think it's oversold. Like, if it does, it revisits like $90 a share. That's like probably the stupidest mispricing this decade. That's not going to happen. But if it did, I'll be in an ethical dilemma. Because I like making money. I do. But I also hate Meta, and I don't want to help them.
Yeah, I think that's very fair. Like, you've been pretty consistent in your position on Meta, and that's totally respectable. Okay, Catherine asks, VGen question: 1 out of all the Mag 7s reporting in the next 2 weeks, this is not including NVIDIA, which do you think will be the most successful? Google?
I'll go first. NVIDIA.
Okay. Breaking the rules there.
Well, but no, like, I know what she's saying. They're not reporting, but this tells you all that you need to know, and the stock moves accordingly because these guys are spending massively on CapEx projects, and that's not changing. The only bearish argument on them was really focused around depreciation. And so, and that honestly, like, if you look at the H100s, H200s as well, those are still very viable chips. Even some of the chips that they have from like 5 years ago are still doing meaningful tasks. So the longer depreciation window that the hyperscalers have, I think is perfectly valid. So all of it points to NVIDIA doing incredibly well.
Opinion on US Canada. I mean, I talked about this a little bit. I think they're gonna continue to deteriorate perhaps over the next year. As to what I want to see, I mean, let's see. I don't know what's going to happen. I think there's definitely something that's going to happen with Alberta at some point or another. But I just saw Express Investing's question. But yeah, I think the relationship, I think now that Trump is no longer focused on Greenland, his attention is going to go to other issues. And Canada is definitely something that's caught his attention in the past. So we'll see. Thank you, Express Investing here, Tevis. Sorry, only a tenor, not as bullish on SoFi. Thank you, Express Investing, very much appreciate that.
Thanks, man.
So let's see. Anything else that we want to cover here?
Yeah, I saw a few questions on Robinhood. I just put it in the chat where it has sold off a lot from 150. It's not quite down 50% from the peak, not 50%, 33% from the peak. It's attractive here, but it's my number one position. I'm not going to add to it. I think 80 for me is about fair value. It can go, it's very cyclical. So if crypto winter hits, it can get slammed. So it's hard for me to just say, oh man, until it gets like really stupidly overdone, which has happened with Robinhood. It's hard for me to really add. But if I did add, I got the share count that I want. I'll probably just do calls, just not here. VG, I did see a couple of questions on VG as well. There was a couple of interesting things that happened with VG. I know it's been selling off a little bit this week so far. But two pieces of news. One is, of course, massive weather front here in the United States, not as meaningful. Europe, very cold winter. Their reserves were quite low going into the winter anyway. There's a perceived glut for LNG, but it doesn't really matter for this year. VG, of course, benefits from the spread in prices between here in the United States and over in Europe. They've filed for a increase in output at the Plaquemines installation, which basically means they don't have to spend any extra money on capital X. They just are able to increase, and that's ahead of schedule. They will become the largest LNG exporter in the world at some point over the next few years. And then at the same time, the EU Council signed an agreement basically to divest away from Russian oil and natural gas in their pipelines. Some actually happening as early as the beginning of next year. Some of it's faced a little bit later too. All really good things for VG.
Whoa. SoftBank's in talks to invest up to $30 billion more in OpenAI. Dude, I don't even understand this obsession with OpenAI. Like, there's other players in the space that have a superior product currently, like
NVIDIA.
No, I mean, like, yeah, like you can even invest in Gemini, right? Invest in Anthropic. Invest in Nebius. Sure. I mean, if SoftBank wants to invest $30 billion in Nebius, then we're gonna wake up to a big dollar.
Can you imagine?
Like, I don't see your other question. Maybe re-ask it for us, and we'll just spend a few extra minutes, I guess. I really have to go, and I'm actually late, but it doesn't matter.
Yeah, Seb's question is good. At 8:19, what do you guys think about the launch of Tether? So this is not the launch of Tether as far as like another stablecoin, but actually as a publicly traded stock, much like Circle. I think Circle is a lot better of a company. I've not kept up with Tether though, so maybe that's changed a little bit. They've always just been like the sketchier counterparty. Like there's basically two major stable coins. It's these guys. So I would much prefer to invest in Circle over Tether. But I wouldn't really want to invest in either. Like essentially what you're betting on is a couple of things. Of course, tokenization, which I think is an easy bet, but I think that there's easier plays. But also beyond that, you're betting that 3-month treasuries continue to have a nice yield. Now, if the United States is addicted to debt as far as the government, so I don't think that part is going away necessarily. But the more and more stable coins that there are, and I think there's a massive wave, that creates an exorbitant amount of buying pressure on the 3-month treasury, which these are backed by. It's great for the United States government because all of a sudden you can start offering lower yields at these treasury auctions. But that's not great for USAT or Circle or any other business. Circle also, the one thing I will say with Tether is at least they're not positioned such where basically more than half of their revenue is going to another company. That's Circle with Coinbase. So out of these two, I would rather say, I'm just going to invest in Coinbase.
It makes sense. Catherine says, before you go, please make sure to say the next time you're going to be live. We're live every Tuesday at 6 p.m. Eastern for Bootleg Weekly. That's not going to change. There's some scheduling issues sometimes when we're traveling or whatnot. And that's why for the last 2 weeks, we've been doing Bootleg on Fridays. But going forward, you should expect us to be live at 6 p.m. Eastern time on Tuesdays for the show.
Yeah.
Okay. Blake's question says, what general advice do you give about protecting the downside in a concentrated portfolio? Selling calls? ?
It depends. Sometimes I do hedge if there's things out there that I'm perceiving as a risk, and I don't think that the market has really priced that in. Those have done pretty well for me, but I hedge very selectively. Instead, what I prefer to do is just invest in quality names, know that there's going to be some brutal drawdowns like 2022, but those drawdowns are opportunities. And I set my investment horizons for the most part outside of a small swing trade portfolio that never really exceeds 10% of my entire portfolio. All the rest is looking 5 to 10 years out. Now, some things can change. I might exit early. Things might run really fast and I take my gains. So I would rather just not sweat the small stuff and the small moves. And that helps me also sleep at night and not trade on sentiment or on like a fear of a big drawdown. So do what helps you sleep at night. If that's buying puts on your position, just as some downside, just realize it limits the upside a little bit too, because you're taking some of the what could be invested in something else and just having that as a hedge is an insurance policy. Not wrong to do. You might sell some gains. You might do cash covered calls rather at certain levels. There's a lot of different ways you can play it, but really the right solution for you is going to be different than for me, and especially for Tevis. Do what helps you sleep at night.
Yeah. I would say covered calls is probably the safest way to do it, short of buying some puts on just the overall index or on your position, depending on what catalyst you see. But I don't generally hedge all that much with puts on my positions. Okay.
Last thing, so I don't forget, Sir Charles, thank you for the reminder. I actually have my alarm set for this. Don't forget about the Super Bowl ticket drop. They're giving away 20 tickets with airfare and hotel and several other things for Robinhood Gold members. Now, they're not sponsoring the video. I am a shareholder, but I'm mostly telling you guys, if you're a Robinhood Gold person, just log into your app in 7 minutes. And if you win a Super Bowl ticket, you got to invite me. That's the rule. No, just kidding. But I hope you guys win. I hope I win too. So see you at the game.
Do you own any dividend stocks other than BM&R? Yeah, Meta.
VG, PayPal.
NVIDIA.
NVIDIA. Those are my 4.
Okay, thank you everybody so much for watching. This has been your Bootleg Weekly. Catch us 6 p.m. on Tuesdays, and we'll let you know what we end up doing for the Ron and Travis Friday Fiesta show. But if we do that, it's going to be 6 p.m. on Friday. Our other show is with Steve at 9 p.m. on Friday. Thank you so much for being here. Appreciate you all. Stay safe. See you soon. Bye.